So, this is a perfect time to make a video about a trust structure. Now, in Europe, this is on the rise where the governments are increasing inheritance tax, making it harder to be a wealthy person and basically just want to suck you dry. So, modern problems require modern solutions. You're probably thinking, this guy, a bit of a young man, how can he help me? Well, I might be a young man, but my business is not young. The business who I represent have been doing this for many years, very successfully, and has helped many individuals and businesses achieve sovereignty, wealth, asset protection, and everything in between. So in another video, I explained all of our services, and you can go check that out on my channel. So of course, this is not a brand new phenomenon, right? This has been going on for many years, but we have noticing a trend where governments, especially in countries like the UK, are tightening up regulations, they're increasing taxes. And this is the reason why millions of people have left the UK recently, particularly to go to Dubai. And now listen, if you're a person in the UK or Europe or America who want to go move and set up in Dubai, our company can also do that for you and handle everything every step of the way. But me personally, I have noticed working with many people that Dubai is not the only option. And many people do not know this anyway. So if your goal is just to protect your wealth, just to protect your estate and everything you've worked hard for, watch this video all of the way. I'm going to explain what you need to know. Also, if you want to just take this document, just DM me below, comment Notion or comment document, and I'll send it to you. So in short, a trust structure helps make sure that you are not the direct owner of whatever it is you're protecting. Maybe it's a business, maybe it's an estate, maybe it's your savings, whatever. It separates the ownership of the assets from the personal control. This allows you to preserve the wealth effectively with compliance legally, of course, right? Doing this properly is legal, it is secure, and it is a very smart option. This will help protect you from lawsuits, divorce, or whatever, right? I'll give you some popular examples with the Cook's Island. For example, for the Cook's Island, right? If a creditor tries to sue you, maybe you're in America and you're getting sued for whatever it may be, or Europe, it costs 100,000 bond just to try to sue you, right? And even if they do, your asset is protected. You can think of it like a golden chest for your generational wealth. It's not just out there in the open naked for the governments and for the banks to steal from you. No, it's actually protected with many layers of protection. So within a trust structure, what are the main parties involved? So you have the settler, you have the trustees, you have the beneficiaries, and you have the protector, which is optional. Now the settler is the person who creates the trust and transfers the assets into it. So this person will contribute the assets, maybe it's cash, the property, or the stocks, and they can also act as a trustee for more control over a longer period of time. Once it's all transferred, they no longer own the assets. The trust owns the asset. Now the trustees, this is the individual or the entity, minimum of two, who legally own and manage the assets, right? They own the assets, not the trust. Now their role is to manage the investments, the distributions, and ensure benefits go to the beneficiaries. They have powers like the investment decisions, but also they follow the trust deed. I'll stick around because I'm going to explain what a trust deed is and why it's so important within this whole setup. The beneficiaries, these are the people or the groups who benefit from the trust asset or the income. They receive the distributions, maybe it's for education, living expenses. So this more often than not includes family members, charities, or even the settler in some cases. Now the protector. This is an advisor or someone who's overseeing everything, sometimes called an investment advisor. What they will do is they provide consent for major decisions. Let's say, for example, you have investments over 100k, adds a different layer of checks and balances. Now that's a basic explanation. When you have an offshore trust, it can work a little bit different, maybe more complicated. If you were talking about bigger settlements, or if we're talking about bigger assets, more businesses, and you have it all split up across different incomes, for whatever reason, depending on your level, depending on the amount of money, the trust setup can look different. So how a trust works. You have the asset transfer, right? The settler will legally transfer all of the assets to the trustee, who then hold them in the trust for the beneficiaries. The management. Now the trustees handle day-to-day decisions like the investments or distributions based on the predefined rules. Remember, this can vary a lot depending on your situation of the trust. Maybe it's a small one, maybe it's a large one with more layers and more verticals and more income. Benefits. Now the assets, they generate the income or the growth, which is then distributed to the beneficiaries. The additional elements like a letter of wishes, non-binding guide from the settler, can outline preferences without being legally enforceable. Now, trusts are very versatile tools in both offshore and onshore, right? For example, for protecting your estate and your inheritance, you can do it onshore. For offshore, maybe more layers of protection. So these are not just options for the wealthy. They are literally common sense issues to protect yourself legally and compliant. So what types of trusts can you get? To go through this very quickly, you can get a discrete trust, a bare trust, an interest in possession trust, or a fixed trust. So, for a discretionary trust, the trustees have flexibility to decide who gets when and how. This is best for protecting vulnerable beneficiaries, maybe it's young, disabled, or those on benefits. Examples would look like this: an offshore setup in Cook's Islands for a business owner protecting 5 million with protector approval for the larger investments. A bare trust, simple. Beneficiaries have absolute right to assets at the age of 18, 16 if it's in Scotland. Now this is best for passing assets onto minors with automatic handover. An example would be a custodian for a young children's inheritance. Now an interest in possession trust, again a little bit different. One beneficiary gets the income, example for life, and then capital goes to the others. Blended families or provided. This is best for blended families or providing for a spouse while protecting the children, for example. The spouse will get income during their life, the assets pass to the children after death. Now a fixed trust, the set rules cannot be changed easily. Best for long-term planning where certainty is key. And something like this is going to have a different kind of structure and it depends on the situation entirely. So practical use of a trust, right? Wealth and preservation and succession. This is the main feature of a trust. You want to make sure all of your hard-earned money and the inherited money goes correctly to your family line or however you want to set it. Asset protection. Shield you from lawsuits, creditors and divorces, right? For example, now, I made a funny video the other day on this, but a little short. There was a viral video of a famous CEO who, not famous, but he was worth hundreds of millions. And he was cheating on his wife at a baseball game, right? It went viral and everything. It was really funny. I imagine myself that this wife is probably filed for a divorce, right? And now, if this man did set up a trust 2 years prior, he would keep all of his wealth. But he probably didn't, right? So this has then cost him literally millions, literally half of his life of work. So that is why asset protection and trust is so important. Now, tax structuring. This reduces inheritance tax up to 40% in the UK, but not instantly. Sometimes it can take 7 years, but again, within these scenarios, it's not set and matched. It depends on your situation, what type of structure you need, and if you want more information on that, you need to contact me below. Support for vulnerables, right, for minors, for disabled individuals, or those who cannot manage finances themselves, or perhaps it's for charity. An example, let's say a UK family puts their home in a discrete trust to avoid 42% divorce risks or 1,700 a week care fees, right? Now on offshore, they might use a Cook's Island trust for global wealth protection. And this is only a small example. If you're in the millions, then it becomes a lot more important. So why is a trust deed so important? Now a trust deed is the foundational legal document that brings the trust to life, right? Now, for example, in our business Forward Point Solutions, this is what we will do for you. However long the page is, we'll go through it step by step specifically for you. Without the trust deed, the trust does not exist, right? Now this is like a constitution which outlines everything. So the reasons why it's so important. It creates the trust, formally creates the structure and transfers the assets from the settler to the trustee. Governs operations. This is going to set the rules, the powers and the responsibilities for all parties. This is going to ensure the clarity and prevent future disputes. Now it's also going to define the clauses, right? Includes the specifics like the trust name, trustee powers, distribution rules, protector rights, governance laws, duration. Up to 125 years in some cases. So in short, what this does is it legally binds it, right? It makes sure that it protects you from poor drafting, which could expose yourself and a lot of risk. It enables benefits and the complexity for protection. Basically, to cut a long story short, it's a sophisticated tool to make sure that complex trust structures get done properly with compliance and that there's no loopholes or no holes to found out. For example, a poorly written deed can lead to exposure for your tax issues, for your asset protection. So always use specialists like our company. So just to give you a little idea, imagine a pyramid diagram. You have the base, which is the trust deed, the foundation. You have the middle, which is the parties and clauses, and you have the top, which is the benefits and protection. Without the trust deed being a strong foundation, everything else crumbles. So if you've watched this video and you're looking to get a trust, or maybe you're a lawyer and you want to find a company to hand your clients a trust to, contact me below. I can give you more information on what we do and we work and everything like this. And yeah, for watching the video, leave a like and a comment and have a great day.